Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for a pretty crazy trade day. It is Wednesday, the 1st of February, 2023, and right now, just after 6 p.m. or so, we're right in that general zone. My gosh. We saw the Fed announcement came out today, and the market broke on it in terms of the stock market. It definitely was still in the hawkish camp. I was waiting to see what's going to happen with the speech. This is a two-step process. It's a dance. First, the announcement comes out. Then the Fed chair comes out to answer questions, clear things up, and so on. Everybody has a bad day of doing this. This was, I think, the Fed's bad day. I don't think Mr. Powell was as hawkish as he should have been. I don't think he delivered the message. The market is looking for what? You know it and I know it. Where's the Fed going to pivot? This has been going on for 1 year. The Fed can talk all the bad they want. The moment you get a report that shows a crack where things are getting a little better in labor, whatever, the market takes off. So what the Fed can't do is give food to that. You can't give him fodder for that part. Well, he did. Yes, he talked about data dependency. Yes, he talked about disinflation, that the members clearly see that we're on the path of disinflation. That's not deflation, that's disinflation. Labor markets are still strong and out of balance. That might be the word that he used. But he could have said so much more, and he didn't. And I'm watching the swaps market, which are the interest rate futures, front end, back end, what they're doing. And interest rates are falling, not going up, real rates. That's a sign the hawkishness isn't there. With that, you looked at the dollar, which had been as high as 102, going to a big break mode. Gold finished the day about $25 lower, so around 1943. It was just up, as you can see, to 1972. I can go on with each market that went bonkers because he opened the door where the swaps market is now worrying that somewhere between June and December, you're going to actually see the Fed roll rates back down. I think that what Mr. Powell was trying to say is they've got to keep rates up higher and longer, especially the duration of keeping them high before they pivot to the downside, and the market didn't believe him. It's that simple. You don't have to agree with me. Guys will say it nicer than I am, but that's what I think happened today. What else did I teach you? And I try to. You can't jump fast enough to get out of the way of these markets when there's a misstep of any type. If you think you can, God bless you. I have more experience than you. I don't think you can do it. And that's because the algorithm traders are in there, and algorithm traders are computers. They're not people. And they're on a faster line to place an order than you are. And the exchanges give them power for their orders. You don't have to believe me. Look into it and you come up with your own decisions, okay? I know what goes on there. And as they're throwing these things, you're moving like this and you're thinking you can react fast enough to catch it. Most people can't. What I do is I wait to pick up the pieces. Not on today. It may not even be tomorrow, but it'd be shortly after that. Why? Why do I have to walk into first thing in the morning to other central banks that God knows what they'll say? And then I want to see the unemployment claims, and then I got a clear morning. Then I can start making my moves. I actually think today's press conference took all the thunder away from Friday's jobs report. It would have to be a monster powerful report, and to throw things wacko. That's because I think the Fed did a poor job today of delivering the part. So what's going to happen? All the Fed members will hit the road. You know how this works now. They'll come out and they'll clean up what was going on there for quite a while. So that's what I think is going to take place. When you look at the S&P, it's hard to be anything but bullish here. That's not what the Fed wants. You're back up to these old highs. This is not what I think was intended to come out of today's meeting. You have higher lows, higher highs. You're getting a risk-on environment. I don't think that's what the Fed wanted on this. Where's what happened? If you and I come back here, you can't deny that I was out here talking to you right here. I said, I think we're going to get a bullish crossover where the 18-day average gets over the 200. It normally means you're going to try to make a run to make a higher high. That's all that it means to me. I'm sure there's a lot more people that have other ideas as to what it might and might not do. Well, you had your crossover. Now look at what you're doing. So I got what I wanted. Moving averages, they're a lagging indicator. They're not a forward indicator. They're a laggard. You got to learn how to work with them along with Bollinger Bands. Now, this is your first move up to the Bollinger Band in a while. What do I think the pros are doing? Bye, bye, Miss American Pie. They're not loading in here. They're coming out up here, in my opinion. Why? Yes, you have the embedded reading, but they took the risk. You had a bear trap in this market. Let me show you a bear trap the way that I teach you about this. If you've taken my enhanced Bollinger Band course, this is classic. So here's the market. You get a close of under 79. I think the pro money came out. The very next day, the market re-embeds. Now, this is the hardest time. You can count in a year how many times it re-embeds. It's not often, but it does it, and you got to be aware. That is a sign that some of the pros are going to plow right back in with the stop under that day's low and look for the closest moving average above the market. There are none of the big ones, or a Bollinger Band. It's typically what they do. I teach you this in detail. Bingo. Wait, let me come back to this. You ready? Here you go. Bingo. That's where I think they come out. Now, you're embedded. So that tells me that they're looking for ways to continue to buy, but trade against the Bollinger Band. You don't buy to stay over the Bollinger Band. Can it happen? Sure. But that is not what the smart money I've learned over my years does. You never lost the embedded reading here, and you've come back up. You're in the resistance area. Can you go higher? Of course you can go higher. Do I think you'll stay over the band? No. In the Dow, not embedded, overbought, haven't quite gotten to it. So you know the weakest of the indices, it's telling you. Two of them already hit the band, and you hit the third one with the Russell. So you now know which one's the weakest. It doesn't take a genius to see it. Plus, most of these are embedded, and you don't have that in the Dow. So what's that going to do to the VIX? That's going to put the VIX down. What do I think traders are going to do? I am expecting that the professional money is going to write calls against the 1758 level. Now, you will write me, no, they're going to write puts. No, they're going to do this. No, I think they're going to write calls and take it in. I have my own reasons for that, regardless of the strategy you want to play. I think they'll do that, looking to get back to the 18-day average. You trade it the way you want to trade it. In the T-bond market, I started telling you that this market was narrowing in against the 18-day average of closes, and the Bollinger Bands were coming into play. They were narrowing in. You're taking the volatility out of the market, and it's exactly what's going on, and the same thing is going on in the 10-year notes. I expect prices to be contained by the upper band, and right now supports the 18-day average. Void of trend. Do we understand that? We then step to the dollar index. So what we had during this was a bear market rally. Why that? Okay, let's come back away from the past couple of days. You don't disagree we stopped declining about here against the Bollinger Band, and we started going generally sideways to lower. The resistance should be the 18-day average because it's the line in the sand. Markets like to go to a number, often, I believe, the 18-day average, and hang there looking for whatever the next trend is going to set up. Right now, we had a market that was coming down, and you lost the embedded reading. If you understand my enhanced Bollinger Band course, the odds give you a powerful what? That you're going to go to the 18-day average of closes. We talked about it here before this occurred. We're now looking at it. This is what happened the 31st, and this is where you're at now. That's all it was worth. And the market decided it's still bearish. Now, you're down to the Bollinger Band. Why would I press that? Again, just like on the stock indices. I'll let the other guys sell under a Bollinger Band. You do it. I want to be the other side of your trade most of the time. Okay, that's how they build the casinos. Okay, you will win 5% of the time or so. Maybe a little more, I doubt it. Only 5% of the time does it stay out of the band. That's the theory of how the band was created. Eurocurrency. So tonight you're up and over the band. Now you got the European Central Bank tomorrow. They're talking 50 basis point hike tomorrow and maybe 2 more behind that. So what's happening is we believe our interest rates are going to come down. Theirs are going up. Money moves to the strong currency. That's what's going on at this point. Would I ever tell a client to buy over a band? Never. The same theory. It's not the place to do it. I'll have my opportunity to tell my clients to buy. And I'll do it in my morning videos and my written updates. That's the beauty of the written updates. I get to play with them during the day, including special updates for that. The British pound, lower highs, lower lows, but more sideways action than anything. Did you see the size of the strike that's going on in the UK right now? I think 400,000 people. You heard my number. 400,000 people or so went out on strike. Nothing's operating. How do you get to school? How do you get an ambulance? How do you get this or that? Unlike in America, where some of our services, you can't just go on strike. You can't hurt our economy. They need those rules there in a major way. I don't know how you get it done. You know, remember, we're babies compared to their parliament. Then we get to Bitcoin, and you've maintained one thing here, the bullish embedded reading. You're knocking on the door of these highs again. Market still looks to me bullish. 26,000 possibility, lose the embedded reading, then this power comes out of the market in the near term, and maybe you fall back to the 18-day average wherever it's at. But right now it's bullish. Then we're looking at the differential in the Brent crude, and as I said, acts to me like it's topped there. I wouldn't be surprised if the differential gets towards that 18-day average in red. And when we look at the energies, nothing powerful here. So the Chinese have come back. The lunar holiday for all purposes, there's still the lantern holiday and the others coming, but for all purposes from the trading vernacular, the traders are back at their desks and you're not getting a lot of good action out of this market. Okay, that's hurts. Okay, that market. So you're in a bear market, a lot of resistance now at 84.92 to 85.04, the 100-day average. Potential is for the 80.40 level, but you're already oversold. I teach that once you get oversold, why is anybody deploying new money? Let it embed, where both numbers get under the 20 level for a while. And again, that's in that course, the Enhanced Bollinger Band course. Then I'm all over the market. But you're not there. So you're down in a bearish phase. I wouldn't be surprised if you end up fighting at the 18 and the 100-day average. The same thing in the WTI. Is there any reason to be long? That's the real thing. None. None that I can see, not one. Heating oil headed back down into there. And I want to see that gasoline. I'm going to get rid of heating oil and we'll start following gasoline more than we do that. In nat gas, still a bearish play. Nothing seems to lift this market. We have too much supply. Even with the Freeport terminal getting ready to open. Remember, 11 days. I told you last week, it takes 11 days to cool down the pipes, which they're in the process of doing. Then the trains have to be cooled, more permits pulled, everything get checked. Probably by the end of the month, they'll be able to start sending out and loading up LNG tankers again and getting them going all over the world. And that will help give this market a bottom because it'll be supply that we're sending out again. Right now, none of that's going out of there, and we can't make this difference up. We don't have the terminal capacity. So you put it all together, you look at what's going on, and that's why I want you to join me each morning. This is how I talk, but as we're talking like this, we're covering 40 some odd charts, and I'm telling you, buy here, sell there. Here's your stop. Do this. Here's the reason why. You don't have to do what I'm saying, obviously, but I'm telling you what I think should be done, where it should be done. There's times I won't do anything, and there's times I am all over the market. And I can promise you, I was very quiet in front of the FOMC. I practice what I teach. I don't teach and practice something different. Do I make mistakes? Of course. Will I have bad trades? It depends what you call a bad trade. Anything can happen to anybody. Knowingly, no. Do I walk in front of a freight train like we're talking, or a bullet train, and try to dodge it and be a wise guy? No, that's not what trading's about at all. But I talk about all that and teach it to you. Go to our website under the word research. It's all explained there. By the way, if you want to learn about the Enhanced Bollinger Band course, when you go to our website, that's under education. You can click up here at any point. It'll take you into the research area and join me. It's that simple. I'm Ira Epstein. I'll see many of you first thing in the morning around 5:30 as I start recording the morning futures video. You take care.